Hey everyone, this is Mark here with Mark's Home Living, and I've wanted to do this for quite some time, which is have a good conversation with a lender about what's going on in the market. I wanted to give you guys all the details, all the really good information. And today I have one of the top, if not the best, lender in all of Arizona. Ladies and gentlemen, let's welcome Annette Hunt. Woo! I got claps and everything. Annette, what's going on?
Well, thank you for such a great introduction, Mark. Oh my gosh. I couldn't have said, I couldn't even say that about myself. So thank you.
Yeah, it's all good. It's all good. We're good pals, man. All right.
We
So
are.
yeah, so I do have a few questions, and you and I, we always talk about getting information out there and what's the best way to get it out there to the masses. And a lot of times we feel like there's so many things that just pass people. They don't get to see, they don't get to understand because they're just not behind the scenes 24/7 like we are. So, if you want to introduce yourself, tell them a little bit about yourself and how long you've been in the business, what you do, and so that the people who don't know you, who might eventually want to work with you, have a sense of who you are.
Oh, well, thank you. Thank you. I would be happy to do that. So, I have been a producing branch manager. I am currently with Guild Mortgage. I've been in the industry over 20 years, and I manage over 16 loan officers and various teammates that all help make the magic happen behind the scenes when you get a loan. So,
Excellent work. Now, that's a long time to be in the business. I'm sure you've seen a lot of ups and downs, right? But let's just jump straight into it. I have some questions here for you, and we're gonna break it up in different sections. So this section I would consider this the core value questions, right? So affordability reality check. All right. So if you have a buyer that is targeting a home at around 450,000, right, today, what is a realistic payment, including like taxes and insurance for someone like that?
when I look on average where rates are at right now, I would say roughly about $3,400. And that's
34.
including everything. That's HOAs, that's taxes, insurance, everything.
That's a lot different than when I bought.
Yeah.
$3,400. Oh my gosh. Okay. All right. So that's
Yeah.
what people should be expecting these days.
Yeah, absolutely. It's very realistic to where this interest rate environment is right now. And, honestly, we are in average rates across history. What's not average is the purchase price across history. So yeah, but that's very typical of what I'm seeing right now.
Okay. That's solid. I think what I'm seeing also in the market is I'm seeing some of those prices. They're going to drop. I think the sellers are a bit stubborn. But I see a few in different zip codes that are getting the picture. All right, cool. Now let's move on to like down payment because this is a big thing. There's a lot of misconceptions about down payment, about what's true, what's not true, how much you need to bring. People have the typical 20%. That's not always the case for everyone. So what's the difference between, you would say, like a 3%, 5%, 10, 15, 20% down? How does that actually affect someone who's actually going to purchase?
So if we're going with a regular conventional loan, let's just go with your plain vanilla streamlined conventional loan. That would actually have some really good implications the more money you do put down, right? You're going to save on mortgage insurance. And mortgage insurance, just to remind our audience, is on any loan unless you put 20% down or more. So it just depends on what type of mortgage insurance is going to come into play, and really where your credit scores are at, and what the down payment's going to be on how much that mortgage insurance is. So that's one of the big factors. But when you're looking at down payment, if you're putting 20% down, you're already going to save off the bat on your monthly payment. And then you're going to save by not having mortgage insurance. So that's a big deal. When you go up the range a little bit, to 10% or 5% or even 3%, most people don't even know that you can put as little as 3% down. So that makes a big difference for those that have really good credit. They just haven't been able to save. And so having an option to put 3% down on a conventional mortgage is really a lifesaver for some people.
Yeah, totally agree with that. Totally agree with that. And you'll be surprised how many people actually don't know. It's actually wild.
Yeah.
I have some people that they could have bought like you have some clients that they could have bought like 2 years ago, but they thought they needed 30, $40,000 before. No, I'm not saying that's not a bad. It's a bad habit, or but I'm saying the strategy wise, it may not always be the best scenario for you. You know what I mean?
And that's where we come in and strategize with the client on how much they want to put down and how that affects the monthly payments. Because sometimes, even with 3%, 5%, 10%, 15% down, anything less than 20, there are ways to not pay a monthly mortgage insurance. And most people don't know that you could actually do that. There's some really good options with that. Obviously, it's going to bring down the payment, and right now there might be an opportunity for the seller to pay for that mortgage insurance in advance, because that opportunity for buyers to get seller closing costs paid for is very likely, as we both know right now.
Yeah, sellers kind of have to do that. It's definitely a buyer's market. Okay, sellers,
Yeah.
listen. If you want a buyer, you have to offer up that concessions, man. Straight up, you got to offer that concessions. Okay, so cool. So my next question to that would be, all right. So you could put 3% down. You do what's best for you strategically. Credit score wise, what score, in order for them to get really good rates, what score actually moves the needle?
760 or higher. That's where you're going to get premium pricing. 740 is really good too. Like, you could be in the 740 range and still get good pricing and good interest rates. But if you want the best rate, you want to be over a 760 credit score.
All right, so that's top of the line there, right? 760.
It
Okay,
is
you
top
gotta
of the
be you
line.
gotta be perfect for quite some
Yeah.
time to get that 760. But what if most people, I see most people around 640. Okay, so help me understand the difference between that 100-point difference, right? So if I show up with a 640, which I can still get a conventional loan at 640, if I come in with a 760 credit score versus a 640, how much difference in rate and payment are we talking about, that makes it, that I should say, that makes me want to get to the 760?
You could save virtually over 1% in interest rate by having that better score from a 640. Yeah, it's a big impact. And when you look at it from a standpoint of every eighth of a percent, and this is just for an example, let's say interest rates are at 6%. Okay, and you have a 640 score. So that means your interest rate would be 7%. Every eighth of a percent in between, so 6.125, six and a quarter, six and a half, like you go up the scale in increments of eight, it changes the payment by $30 for every eighth of a percent.
Mm.
So it's a big impact, right?
Yeah, that's a big impact. That adds up. That adds up, okay? so, so I think we should get our scores in order, right? That would be ideal.
Yeah.
Get your credit score in order. The other side of it, I see as well is I granted as important as it is to have your credit score in order, you also have to watch the timeline as a real estate agent, because some people get so confused, and sometimes I'm like, dude, you can actually buy right now, but they're like, oh, my credit is not, I need the best. But dude, if okay, granted, say it takes you a year to get your credit score to where you need it to be, but no, the value of the properties and the competition, by the time you're ready, no, you're dealing with more competition, so what would you say, especially when to buy and getting my finances right? What's a good happy medium? Because I think that's where most people are going to be.
So you have a happy medium right now with the 640 credit score. And that happy medium is called an FHA loan. So FHA loans, especially with Guild, any score above a 620, you're not going to have a change in rate. You're
Mm-hmm.
going to have the best rate from a 620. So FHA would be the best opportunity and the best option at that time. So that is your happy medium. So you don't have to wait, is what I'm trying to say. You don't have to wait. And I've seen, you and I have both seen our clients wait, and unfortunately, they haven't bought. And so what has happened since 2021, 2022, when they've wanted to buy, even though our market is what it is right now, we still had increases in purchase prices over the last 3 to 4 years. It's slowed down over the last couple of years, but they're still increasing. So now, and I don't know what you're seeing, but I think right now we're a little flat.
It just depends on the zip code, for me actually. So it just varies depending on where we're at. And so that's why for everyone, everyone's strategy is different, depending on where they want to live. It's not a one size fit all, which everybody needs to understand. It's not a one size fit all, especially when you hear your friends, oh, we bought and this was our experience. Do not compare when your friends bought, how they bought. Do not compare any of that stuff to your situation, because it's different every single time. All right, cool. So, if someone, for first time home buyers, right? If someone has about $12,000 to $15,000 total, how should they allocate that when it comes to them purchasing their home?
I would say it depends on the purchase price, right? Like we have opportunity to do down payment assistance. So if they need, because anytime you buy a property, you need to be prepared for afterwards. What happens afterwards? What do you need to buy? Right? Rugs, window coverings, shower curtains, the whole thing. Like there's so much. And so depending on if you need down payment assistance, I would look at that as an opportunity. But 12 to 15,000, that would get you into about 380. So that would cover a down payment for a house that's roughly 380.
Yeah, and that's good to know. And I think that's how we need to look at it. And sometimes it's helpful. Sometimes I don't necessarily see it as helpful. As long as you're able to, because if you're getting down payment assistance, though, you're paying a higher rate, right?
Yeah,
But if you're
a
able to
lot.
pay for your appraisal, you're able to pay you put down your earnest money, and some towards your closing costs. Because at this point in time, we're letting the sellers cover those closing costs. And we know like the new bills are offering it's like ice cream right now. They're paying for everybody's closing costs. So that's why I think everyone, it's important to sit down with either a lender or a realtor prior to deciding what you're choosing to do. Um, and then work out a strategy. Strategizing is important, and especially if you could sit down with both a realtor and a lender at the same time, that's even better, right? Because there's sometimes things as the realtor we might not see or understand that's happening on the lending side. And it's the same thing for the lenders. There are times where the lenders are focused on the numbers, but they're not really paying attention to what's available, which area this is available at. It doesn't, you could say, okay, you qualify for 380. 380 is not going to get you anything anywhere where, if you're looking for something nice, depending on that client. So it changes. So you need to strategize with both, right? And so if you lock in with Annette and I, you get both at the same time. We'll sit down and do a consultation with you together, and we share notes all the time, right? And that's important. You want a duo like that. So, yeah, anything to say to that, Annette?
Oh, I 100% agree because we collaborate, and the information that I have is really good for Mark to have because he can negotiate better on your behalf. So that's where our teamwork really comes in for our clients is when we share this information, it's all about getting the best situation for you as a client.
Yes, completely agree. So now my next question is, there have been some misconceptions between VA and FHA loans. What would you say are the biggest misconceptions about these loan types right now?
Well, FHA in particular, there's a lot of misnomers about FHA. The first one being is that you have to be a first time home buyer to do an FHA loan. You don't. There's no reason for you not to be able to do an FHA loan. Like, legit, if that's something you want to do, then by all means, let's take a look at it and see if that's the best option. It may not be. The conventional might be the better option. But that's when talking to me and strategizing on what best product suits you is really good. But when it comes into FHA, though, that's one of the biggest misnomers. And on FHA, we can go as low as a 540 credit score. So that's another big misconception that you have to have perfect credit. You don't. Now, is it harder to get it approved when you're in the lower range of credit under a 620? It is. You've got to have some good compensating factors, such as do you have a really good savings account like a 401k? Right? Those types of things are really going to boost and cradle that loan, so it'll help. Now, with VA, the biggest misconception with VA is that they're harder on the appraisals. And that does happen with FHA too. Like, oh, you don't, like if you're a seller, the VA appraisals are typically those things that a listing agent will tell their seller, oh, you don't want to do that, the appraisals are harder. They're really not. They just want to make sure that the health and safety issues on the homes are addressed, and that there's no termites, right? That's one of the things that is required on a VA loan. But veteran loans are amazing. They have done so much for our country, and this is one of the benefits of being a veteran that they get is getting a VA loan. And it's a fantastic loan. I'm a fan.
All right, Annette. So let me I just want to break some of these myths that are going around, right? And so it's going to be just quick questions, and you could tell me yes or no, right? So, or true or false, right? And if you want to expand, feel free. Okay. Do you
Okay.
need 20% to buy right now?
No, you do not.
Okay.
You can
Does
go as low as 3%.
got it. Changing jobs, is that going to kill your loan?
Not always.
Okay. Waiting for
There's situations, right? Like you and I had a client that switched jobs a week before closing and we still made it work.
That was absolutely painful. Oh my gosh. And if you're watching this, you know who you are. If you're watching this, you know who you are. That was a stressful time. Please, ladies and gentlemen, don't change your job while we're under contract. No, granted, not every lender is on it and can get it sorted. Okay, just let's not do that. Don't buy a car. That's the big one. Don't buy a car and don't change jobs while you're under contract. Let's not do that.
Right.
All right. The other one
Right.
I have is uh, does having student loans, does that mean that you can't qualify for a loan?
No, not at all.
Okay, perfect. I think that's all I have for right now. Um, is there anything in this current market that you would like buyers to be very aware of, especially when they're approaching getting into the market, purchasing a home? What is something in all price ranges would be very effective for them to implement while they're looking for a home?
Just know that our interest rate market is very volatile. Interest rates change every single day, every single day. So they go up and they come down. We can't time the market, right? There's so many factors right now that go into interest rates and how interest rates move, that is the one thing that you can never count on. So what I would do is get pre-approved, make sure that you're comfortable with that payment, because we're going to go off of the interest rates that we have right now when we're looking at your pre-approval. Because here's the thing, interest rates are mostly trending down right now in this market, and they have been for a while. So that's the good news. And we're expecting that to still continue to happen. However, it's still going to be a roller coaster. So just be prepared for that, right? And be prepared with your lender. Come up with a contingency plan. So that's the biggest thing when it comes across all purchase prices.
Okay, so if you're a buyer and you're looking to purchase within the next 60 days, you need to book a call, or the numbers will be down below, or you can click the link and take our strategy test, and then we could see where you're at and we can help you get into a home ASAP. It's important that you get connected with us so that you can get into your house quickly, right at the new year, or anywhere in between. So this is Mark here with Mark's Home Living. This is Annette Hunt. Annette, thank you for being with us. I appreciate your time, right? I know you have lots of work to do. Is there anything you would like to say to the viewers?
Well, if you are looking to buy a house right now, it's a great time to buy. If you have to ask yourself, is now a good time to buy? And that to me means that you're not ready, right? Because when you're ready, you're gonna go. And I'll tell you what, when you're prepared and you have a great team like Mark and I, there's nothing that can stop you. Seriously. It's it's a great time to buy right now. In fact, I think it's the best time for buyers it's been in years. So, it is more of a buyer's market and there's a lot of opportunity out there for buyers.
100% agree with that. There are 24,000 homes on the market. Only 6,000 are under contract as of right now, and so that's just almost just a third of the market going under contract. So you have plenty of options, but it's always important. I know it's an emotional process, and it's important to work with the right people who understand your life, your lifestyle, what you've been doing, where you want to go, your future dreams and goals. Right? We're not just trying to get you into a house and then that's it. No, we're vested in your goals, dreams, and desires. So, give us a call. Click the links below, and get in touch with us. And we'd love to hear from you guys. All right, Annette, this is it, man. Appreciate you, and everyone, we'll talk soon.
Thank you, Mark.